Uh, Good evening. So I'm sorry for being late. Kuna wale ilikuwa like we start the meeting at 8 ama 9 but nikakuwa busy kidogo, so nimeenda kuangalia, sio kila mtu anaweza ingia saa hizi because kuna watu maybe wamelala, wamechoka. I decided to make a video that I think it can serve all of you the way it's supposed to be. So ilikuwa we talk about Fefaru gap. So let me look for one and explain. In 15 minutes we have one, so we can start with it. So ukiangalia, we have this Fefaru gap. Let me use my phone because sasa hakuna wifi, like I can access whatever. So ukiangalia, we have this Fefaru gap, and the Fefaru gap is like, notice like Fefaru gap is like a CB and a BC. CP means sell side imbalance and buy side inefficiency. So at this point, which one is sell side imbalance and buy side inefficiency that makes a CB? This movement, this Fefaru gap is for sell, so that is sell side imbalance. Then this move is buy side inefficiency. The reason why they call it inefficiency, it does not come back into this Fefaru gap to make it complete or to fill it. Yeah. Now you can see the market tapped the Fefaru gap and drop down. So that's what makes it to be a Fefaru gap. Same case to buy side. We have a bullish Fefaru gap. This is a bearish Fefaru gap. So we have defined what's a Fefaru gap. As I said, number 2, how can we know that this Fefaru gap is strong? It depends what are you looking in the market. At this point, we can say the market is downtrend, but as you can see, it does not break the 15-minute time frame structure. Yeah, break of structure. For those who use it, it does not. So the downtrend is not yet confirmed, but in lower time frame, 5-minute, whatever, you can see it has done so. So if we mark this higher, this one and this one, we will know what the market is targeting by the use of Fefaru gap. So when we offer the Fefaru gap in the market, it's it we're targeting the opposing BDRA, like liquidity and Fefaru gap or order block. So the Fefaru gap might be formed and act as a rocket or a magnet. A magnet, it means like it is pulling, and it is attracting the market. How can I say? The work of the magnet is to how can I define it? Like to attract the things. So when the Fefaru gap is formed, in simple term, we either go back to that Fefaru gap or continue from that Fefaru gap. And in the market, which Fefaru gap are we coming from or we are going to? When the market's on a bearish side, then we try to look for, is there a Fefaru gap the market is targeting? Is there liquidity? Those two things. Because you cannot say it is targeting an order block without mentioning a fair value gap, because fair value gap go hand in hand with order block. Uh, in the topic of order block, I will explain it, but for today it was all about the fair value gap. So the importance of fair value gap is to give us the the probability of our trades. Maybe I was executing my buy entry in 1 minute time frame. That's the 1 minute time frame. As you can see, uh, as you can see, the market react is react is reacting from the 15-minute fair value gap. So why is the market reacting from the 15 fair value gap? The trend of that reaction bearish. Are you seeing? Yeah, because when that 15 fair value gap was formed, the market traded back into it. A lot of market is trading from it. So why is the market trading from it? By just tapping it. Yeah, that's where it tapped, and here, and it is now continuing. So the swing low of that 1 minute time frame, will it be this one or it will be this one? Actually, on my side, the swing I will say this one, and don't ask me why. So what we are targeting in 1 minute time frame, I can say this liquidity in 1 minute time frame, and we're coming from the fair value gap. So when you go to that higher time frame, the side of order block, if you tell me this is another fair value gap, then this is another block we're acting from it, I can agree, but how strong it is. So when you go to 5 minutes, maybe this is what is happening. There's a rejection, and inside this rejection, it is mean there's BDLA towards the direction of the market. So EOP, I will explain on its own time, because if you mark that week and go to lower time frame, you'll find that it's a fair value gap and not a block. So in 1 minute, we found the market reacting from the fair value gap, but when you look at this 5 minute rejection and this one, then we are likely to continue bullish. So I've explained about the role of the fair value gap in the market. I've defined it. Now I'm going to explain how do you know like this fair value gap is going to hold. It is going to hold the price, like the price is going to react from it. Like how can we know that this fair value gap has a potential to hold the price? Has a potential, like the market will come on back to it and they react from it, like sell or buy. Yeah, like the one this is reacting from it. We do something known as filtration process in trading. Like I'm filtering, I'm starting from higher time. The work of filtering is removing impurities and remaining with the perfect thing. And the secret in trading, kindly focus maybe for things that are working. Yeah, maybe fair value gap and order block and the liquidity. Or just use maybe moving average if they are working for you. So filtering, we can start maybe from 4 hour. So how do we filter? You came to 4 hour time frame. You look for the fair value gap that has not yet traded back into. In Swahili, fair value gap ama nafasi yenye market haijarudi hadi hapo, candlestick haijaikuza hata, because we have expansion candle, then the next candle can be anything. So in that expansion, no candlestick has come back to expansion. So for example, the reason why I'm trying to use MT5, you just need simple things in MT5. No need of trading view. No, these things are about, let them have them on your head. Train your eyes to see them in MT5, not in trading view. Like this is a favorite gap in 4 hour time frame. I can go to lower time frame. Let me remove this because it's not in 5 minutes, but I'm sure it is maybe in 1 minute, in 1 hour 30 minutes. Let us see it. It is not there in 30 minutes, but 30 minutes. Yeah, in 30 minutes we have that favorable gap that is there in 15-minute time frame. So that's filtration. Like the favorable gap that is in 30-minute time frame, it is there in 15-minute time frame. Again, is that favorable gap also in 5-minute time frame? Yes. Is that favorable gap also in 1-minute time frame? Yes. Then if that favorable gap is there, then that means that favorable gap is stronger in lower time frame, in less than 30-minute time frame, where that favorable gap is formed. Like in 1 hour you don't have that favorable gap, right? In 4 hours you don't have that favorable gap, but in that minute we have that favorable gap. 15 minutes we have that favorable gap. 5 minutes we have that favorable gap. 1 minute we have that favorable gap. It means like the market will react from that favorable gap. Why? Because it is a context of 15-minute time frame, 5-minute time frame, and 1-minute time frame. If then that favorable gap is a context, that means that favorable gap is likely or is stronger to hold the price in lower time frame. The market is likely to react from it or toward it. As you can see, the market is reacting towards that favorable gap in lower time frame. Let me have it. Yeah, the market is reacting towards that favorable gap. So the question is, will the market react from that favorable gap to sell side? Now, if you just want to know it is going to react, what does the 1 hour candle communicate, 4 hour candle communicate, or what does the candlestick in that time frame communicate, or what are you targeting in this market? Let me remove them. What were you targeting? Were you targeting this liquidity? Were you targeting this 4 hour fair value gap? What were you targeting? Were you targeting this area? But again, somebody know why the market is trying to go down that way. Maybe it's looking for another block, a strong one to break the previous higher. So many things. But for the side of the fair value gap, if the fair value gap is representable in a higher time frame, it is available in a higher time frame in another way. Like in 1 hour we have that fair value gap, 30 minutes we have that fair value gap. 15 minutes we have that fair value gap. 1 minute we have that fair value gap. So what do you think? That fair value gap is likely to hold the price. It is likely to act as a magnet and at the same time as a rocket. Yeah. Depending with the direction of the market and depending with what you are targeting. So I don't know what to go deeper, but in the side of the favorable gap, I've done with it. And when I say the favorable gap that has not traded into back into, I mean like this one, that one. Because as you can see, the market has not yet come back to it. No, it has not. Means it's a fresh one. And for those who can ask me now, when that favorable gap is that way, where's the order block? The order block may it is simply this one. Yeah. And if the market came that, this is an additional information. If market come to that order block and they close it inside the order block with a candle, then probably the market is targeting this swing low. I will explain that in details very soon. But in the side of order block and in the side of favorable gap, that is it. If we have a daily favorable gap, and that favorable gap is in lower time frame, for example this one that is likely to be formed today, you mark it. Remember, it is of 1 day. It means that favorable gap is stronger than of 4 hour, 1 hour, 30 minutes, 15 minutes, and 5 minutes. So the market is likely to react from that daily favorable gap and respect it. Getting this one. So if you go to 4 hour, do we have that favorable gap? No, but we have a miniature favorable gap inside that daily favorable gap. So what do you think? It means the market will respect this area. And I know this one. If it's all about this one, then it will target this liquidity. And as you can see, that's what the market did. It came back in 4 hour, it is whatever. So is that also favorable gap in 1 hour, whatever? No, it is not. Then means that favorable gap will be respected due to its lower time. Lower time we found it is like a manager favorable gap, order block. So and that's why that higher time frame favorable gap was found, because if you take a keen look inside this daily favorable gap, you realize we have this order block in 1 hour with its favorable gap. It's a fresh one, very, very fresh one. We have that one. We have this one also. Yeah. Inside that context of that favorable gap. So what do you think? That makes that favorable gap to be strong, makes that area to be strong. Getting so maybe most probably that's what the market's targeting after reacting from that 15 time from favorable gap. And what if it cannot react from that 15 favorable gap? What do you expect? Once the market break above or close, okay, there is difference between weakening the favorable gap and breaking it. Breaking it, I mean, if market close above or below the favorable gap, it will test that favorable gap, it will continue higher. Why? That means that the market will form another block inside that favorable gap for higher continuation. So favorable gap will act like two things. Will act like a magnet and a a rocket. Yeah, kama msumeno. mm, Actually for today your topic ilikuwa less that way. Yeah, we are not to discuss that much on it, but I think now we have a concept on fair gap, because as you can see that fair gap is being respected. And listen, why is it being respected? Because if you look above it, we don't have any fair gap. We don't have any competitor. We don't have it. Even if you come to 30 minutes, we don't have any fair gap. That's the only fair gap. And that's why the market's likely to react from it, because it is strong. It is alone. Yeah. Yeah. If you go to 1 hour, 4 hour, we have no fair gap. This only that is well feasible in 15 time frame. And that's why you see multiple rejection on its discount area of that fair value gap. Yeah, the lower side of a fair value gap is a discount. The upper side of it is a premium zone. So in the discount area of a fair value gap, the market is respecting it so much. But again, you must know that this fair value gap has weakened by market maker. So means it won't be strong enough next time to hold the price the way it is holding it right now. You getting? Again, another thing, these are liquidity. So are they expecting the fair gap, or they are swapping the liquidity? Actually, they are doing the same thing. That is the trick of market makers. They're sweeping the liquidity. Again, at the same time, they're respecting the fair gap. And if then there was no liquidity, they could have respected the fair gap that way and continue low. And wow, that's for today. Maybe tomorrow class we explain about order block. Yeah, what makes order block? What's the law of order block? How many times order block will fail you? Another thing I failed to explain, not failed, I was almost forgot to explain about fair gap. Market makers can decide to erase the fair gap. What do I mean by erasing? Erasing, I mean this way. We are going up, right? We expect we react from this zone, right? Instead of reacting, they come, they close above that fair gap, they retest that fair gap, they continue high. In this continue high, it means they are for further fair gap at this area. And that means they come, continue high again. Break of structure, break of structure. And that means then they offer the fair gap at this point. That's why the market came to retest it and continue, retest and continue. So they will erase that fair gap and give you another fair gap for bullish or bearish continuation. So sometimes market makers erase fair gap. Even order blocks they erase. So you need to be careful, because they use those fair gap for manipulation, those order block for manipulation. Oh, I think it's enough for today. We can start again tomorrow. Thanks for being there for me and listening me. Yeah. This mentorship is free. Yeah. I don't need anyone to pay me. Yeah. Not that I've made it, not that I need whatever, but I'll assist those who are ready. If you feel you don't need it or are okay, you can go. Yeah, but thanks for your time, boys.